It's great to be here today, and it's great to have the opportunity to share a little bit of what we're doing with everyone. The Future Proof Festival has been a great opportunity to mingle with folks, get a little feel for market sentiment and what we're doing. Things getting a little ahead of me here, maybe because I pushed it inadvertently. First of all, I'd like to. It's going forward. Can we stop this for a minute? It's got a life of its own right now. There we go. I think I'm supposed to have control here. First of all, I'd like to thank everybody for letting us appear here today. I want to give a shout out for a starter to a gentleman, Dakin Campbell, who wrote a very interesting book last year. He's the senior correspondent at Insider, and it's entitled Going Public, How Silicon Valley Rebels Loosened Wall Street's Grip on the IPO and Sparked a Revolution. And what we're going to talk about today is a revolution. This is going forward and wants to kind of go on its own. So I don't know if I'm not going to be able to. This is unbelievable. You live and learn, huh? Okay. Well, I'm sorry. Okay. Well, let me give you a little color here. I'm going to have a short time frame to do this, but we have developed the world's first and only IPO network called ClearingBid. And it is basically established around the inequities and inefficiencies of the IPO pricing process and the lack of access and distribution. So maybe we can get going here. I'm supposed to have control in my hands. Opening IPO investing to all. Okay. Kava. It's not fear of missing out, you've missed out. And it's not just Kava that you've missed out on. It's other companies in the past that also have come to market that everybody's basically had no access and no ability to participate in. Take Dutch Brothers, for example. Great offering. Actually, post-deal was one of the best performing companies out there. No customers, no real affinity investors had an opportunity to participate in this IPO. And why is that? Well, and there's more you're going to miss out on. I think tonight, ARM is being priced. It's purportedly 5 times oversubscribed. I'll talk a little bit about the oversubscription and what that means. But virtually every IPO goes to the largest institutions, and that's by design. Everyone else is eliminated from the ability to place an order, participate, and have that benefit. And it's really a way for the large underwriters to work with and effectively do well by their large clients, but it's at the expense of everybody else. And it is actually results in inefficient execution at the end of the day, which we're going to talk about. So it's a black box. And what really happens is the institutions place their indications of interest, which are simply indications of interest. They're not firm orders. And as that order book gets billed, ultimately the underwriter determines what they think is the right price, which is inaccurate. It's typically underpriced, but in some cases can be overpriced, like a direct listing. And it's highly exclusionary. What we're offering now is something that's never been seen before. Other companies have tried to tackle little pockets of it, but what we're going to show you is truly revolutionary, and it's disruptive, and it's democratization at its best. And we call it ClearingBid, which is the world's first and only IPO network. Our price discovery tools allows for maximum and for optimization pricing and maximum distribution. And the way it's structured is that advisors, whether FA or RIA, is able to put an order in on behalf of their client exactly like they do today in the secondary market. It's as if they're submitting a secondary market limit order to an exchange. Same pathways, nothing's different. I'll talk a little bit about what happens. We've got a team that is born from really within a combination of Wall Street and exchange technology. Our chief technology officer was a former president of OMX. Our chairman was a former president of Moody's and the Export-Import Bank. We've got a fantastic team of veterans that are really skilled to be able to do this and hold their own with the street. Now what happens today is as the orders come in, and that market price is gathered, we're able to, in effect, work around the fact that the inefficiencies of the pricing. And stepping ahead just for a minute here, what it really is doing is it's leveling the playing field, similar to what's been happening in a number of other industries. We've seen it happen in real estate with the democratization through MLS listings, through higher education, and we're doing this now with IPOs to raise more capital for more companies, have greater access, and allow you all to be able to provide something to your clients that is going to allow you to build more assets under management and have more relevance with the clients. Again, what we do is we allow and permit the order Venturi to be exactly the same as a secondary market order, and what happens is over time, you can track and see how that order relates to the overall size of the book. We publish publicly for everyone to see how that order book is developing and building as you get closer to the IPO, and we price and we display what we call the clearing price, the price at which 100% of the offering can be sold. And you're going to know whether your order's in the money. In other words, if your bid is, at this case, 26 or higher, you're in the money. And if you're in the money, you're going to be assured of an allocation. Let me repeat that. If your order's in the money, you're going to get an allocation. That allocation is dependent upon the timestamp of the order, with earlier orders getting filled with higher allocations or fills in later orders. So really, we're borrowing from the same methods and principles as the secondary market, based on price and time. But we're applying that to the primary new issue market with easy, seamless access for everybody. We've also developed what we call the Knowledge Hub, and this is a space for IPOs and other information. It's going to be the opportunity to create content for education, for engagement with your clients, for greater interaction, and really level the playing field so that all investors, not just retail, but retail, mid-cap, large cap, everybody has the same information, the same level playing field. And what you'll find is that in combination with this, as we bring deals to market, we're not only providing the pricing information, but we're also providing all the marketing materials, as prospectus, the net roadshow, research, and the ability, again, to communicate directly with your advisor of choice and put your order in. So it's a win-win at the end of the day. It's for client engagement. It's a way to create relevance with your clients. It's a way to build assets under management. And it's a way to really create an opportunity that, again, you've never seen. And at this point, our plans, our first deal is scheduled to be coming to market in January, February. We think it's going to be pretty ground-breaking in terms of what we're introducing. And I believe it's going to be a really high-quality offering as well. But we're really all about working with the advisor community. I was a financial advisor for a couple of years early in my career. I went into investment banking. I spent 4 decades doing it. But I look back at that experience and that time as being extremely relevant and very opportunistic for me to be able to do what we're doing now. And so I ask you to go to our website, ClearingBid.com, register, encourage your firms that you work with to onboard and become part of the underwriting syndicates, just like today. They sign the master agreement among underwriters. They become an underwriting participant. It's the same thing. They get paid. You get paid, or you build assets under management if you can't get paid a commission. But it's all out there for everybody to share and really benefit every constituent in this ecosystem. So again, we're the world's only IPO network. We're coming, and we welcome the opportunity to be part of it with all of you and build something together that I think is going to be meaningful and truly revolutionary. So thanks for the time up here, and I had to ad hoc a little bit with the slides, so sorry about that. Happy to answer any questions people have. Yes, sir. Yep. Question about pricing and how you can be informed on that. So first leading up to it, we're going to be offering a fair amount of educational materials in terms of how investment bankers determine the filing range and looking at comps and, okay, what do they think this is going to be priced at? Because historically, they would think about pricing at one level with a little bit of a pop in the secondary market. Today, they double. It's crazy. So get back to your question. So the preliminary prospectus has the filing range. Now, that's going to be out there for everybody to see, including on our site. So that's the banker's first guess. Now, what happens is orders begin to populate the order book. Once we get to a certain volume, say the size of the offering, say it's 10 million shares, at the low end of the filing range, say it's 20 to 24, we start to publish that clearing price so everybody can see it. So once your order's in, you say, okay, is my bid, let's say I bid 28, it's in the money, it's in the money, it's in the money. And then as that order book builds, maybe the clearing price gets to 24, 26, 27, 28, and you go, oh, okay, maybe I'm out of the money. So maybe you have to adjust that price. But we start with exactly what goes on today. If it's Goldman Sachs, it's Stifel being the book running manager, all that's the same. The fundamental difference is orders are coming through the order management system of each participating broker, as opposed to the syndicate desk of the book running manager who has the discretion traditionally to allocate shares to the accounts of choice. That's off the table. If it's Morgan Stanley bringing the deal, orders are coming through Morgan Stanley's order management system so that every one of those 20,000 advisors has the ability to put the order in, which they can't do today. They can't do it today. So back to your point about pricing. The pricing is really going to be market-driven. And then ultimately what happens, not to get too technical, is the ability to calibrate that price and say, okay, the clearing price is at 26, but if it's discounted modestly, say to 24, is where they price it. So it's a little bit lower than where you could actually clear it all, where there's more demand, and it gets priced at 24. Everybody who bids 24 or higher gets filled at 24, but the allocations are based upon the timestamp, with higher allocations based on early orders, lower allocations, because we have more demand than supply. But what we're trying to do is optimize the price so at the end of the day, issuer gets better execution on price, underwriters have less market risk and really have price discovery. The advisors get paid for doing what they're doing, which is oversight, investor protection, and the ability to really engage with the client. Investors get a fair shake. Hey, if your order's in the money and and these are, by the way, I didn't mention, these are good till canceled orders. So instead of indications of interest like what happens today, which are soft, I mean, again, 5 times oversubscribed on an ARM, those aren't real orders. They're not real orders until they actually price and they see everybody shows up. If everybody got their fill, they wouldn't show up. They get spooked like Facebook did, what happened with Facebook. So at the end, these are good till cancel orders, and they actually get settled and delivered through DTCC. So we're engaging the full infrastructure of the securities industry, the way it works today in the secondary market, billions of times a day, absolutely totally proven, but applying to the primary new issue market and saying, hey, everybody else has the opportunity to participate. No more of this exclusionary stuff. It's time. The internet is here, and the underwriting business has got to catch up with technology. Right there. No. So we really want to be able, these are fully registered offerings, public offerings, the bigger the better, billion-dollar deals better than a $100 million deal, widows and orphans. It's all about know your customer, suitability testing, make sure there's money in the account, because the advisors are responsible for ultimately settling and delivering. So we want to make this available to everybody. It's a fully registered, I mean, it's Kava. I mean, it's Kava for the masses, is what it is. Yeah, you can put an order through a self-directed account today, because technically, Robinhood or Schwab, they're responsible for determining suitability, right? Because you fill out the application, whether you sign a hypothecation agreement to lend your securities or whatever, but they have to do that. So this is the genius of it, and this is why really the SEC is actually very supportive of what we're doing in many respects, because it's investor protection, it's oversight, it's engagement, and on the other side of the aisle, we're helping more companies raise more money with a ubiquitous, way to connect this whole thing. So it's really bipartisan, but it's highly relevant to this market environment. Sorry, you did have a question? Sorry, one more time? Yeah, so what we'll do is you'll see parameters when each offering gets set up, and it's really a plug and play for the underwriters. But it'll typically be a round lot, but it could be lesser amount. It could be 5 shares. I think it'll depend upon the issuer and what kind of parameters they want to set. But they'll be set forth, and you will see it on each offering page exactly what that criteria is. There's also the ability to, got to wrap up, to modify those orders in terms of minimum, maximum stuff. So anyway, I'm out of time. I'm around. I appreciate it. Thank you so much for the time. Appreciate it.